Does it work? Yeah. Thank you so much. Good morning. And I actually should think to move to Cyprus after all these amazing figures. So let me call on stage my panelists. So we have Conny Dorrestijn, if you want to join us, Andreas Vlachos, and Ezichim Onweagba. So difficult. Please join us. Wherever you prefer. Yeah, I think it doesn't really matter. Okay, perfect. Let's wait for Ezichim. So in the meanwhile, till we wait, he's walking here. So this panel, as you can see, is about the future of digital payments. So in the next half an hour, we will try to map a little bit what's going on in the payment industry, both from the traditional side, alternative payments, and also the cryptocurrency space, of course. So before really starting the discussion, may I ask you to have a very quick round of introductions? So just tell your name and what are you doing? Conny. Yeah, I think they're all on, yes.
Okay, thank you very much. And yes, I'm packing up. I'm coming from very rainy and wet Holland, which is a wonderful place to live, but this has many attractive sides, I can see. My name is Conny Dorrestijn. Yes, I'm here to talk with you about my great passion, payments. I have a few others, but more about that later tonight. And in the payment space, I've always been dedicated to the B2B side, all the hard stuff. And when I talked about this 30 years ago, people looked sort of slightly sadly at you. But anything transaction banking, payments, value on the business side, the B2B space is my passion. And helped to set up Clear to Pay once, which was sold to FIS. And I'm now founding partner of BankiFi. We make true value for the small business owners. And I'm a chairman of the board of Cobase, a multi-bank payment hub, and a non-executive director at a fintech VC in London, Augmentum. So I try to spread myself around a bit, as I think at 60 you need to give back.
So basically one of the most expert person in the field, to summarize. Andreas.
Hello everyone, my name is Andreas Vlachos. I'm the growth manager of Binance in Greece and Cyprus. Probably you are all aware of Binance. It's the biggest crypto exchange in the world with more than 150 million users worldwide. I actually come from an academic background, so I was working for the University of Nicosia for approximately 5 years. At the university, we had the first ever master's degree in digital currency dedicated to blockchain technologies. And still the university is a pioneer in the educational world. They even have a course in the metaverse right now. And we are collaborating closely also with Binance in order to provide scholarships and sponsorships for students, as well as joint events. So I come from the academic background. I've worked in a couple of other startups. And yes, looking forward to the event today.
Thank you. Ezichim.
Hello everyone. My name is Ezichim Onweagba, and I head partnerships at Quidax. So Quidax is one of the bigger cryptocurrency exchanges in the world. But we're based out of Africa. So we are pretty much B2B focused with a very large OTC desk in Africa, have a very big retail presence as well. So essentially just helping businesses move from fiat to crypto, crypto to fiat. And yeah, essentially it's lovely to be here.
Thank you guys. So I really want to start this conversation with you, Conny, if you're okay with that. And I want to start by commenting one of the big news that got us quite busy this month. And then from there, mapping a bit where we are now in the payment industry. So I'm referring to Adyen, so the very, let's say, one of the firstborn unicorn in the fintech ecosystem in Europe. And Adyen crashed the market recently by reporting their lowest growth revenue on record. So this was quite a big news, and many people are actually minimizing the fact by saying that it's quite the usual rebound that we should have expected after the slow growth after the pandemic period. But some others are also, you know, shaking the waters, saying this sort of hype problem, meaning, you know, too high valuations, too big expectations around revenues on a business that at the end is a volume play. So I really want to hear your opinion on this, because I also know you are quite also familiar with Adyen as a business. So help us a little bit moving around the industry. Where are we now, and how much this type of news are actually shaking the industry?
Yeah. Yeah, well, first of all, thank you. And yes, Adyen is Dutch, so I'm a little bit biased. But I think the most important thing to see is that this was a reaction by the market. Analysts don't get it, and then they mark it down. I think we also see this in my role at Augmentum. Investing in fintech and investing in new markets carries way more risk and is much riskier. And people all want to get in the mass retail market when the market goes up, because they think that a FOMO, we're missing out on something. But they're not prepared for the slides that come with it. And so I would say the following. Yes, the whole fintech space has been massively overpriced, ridiculously overpriced. We see that. At Augmentum, actually, we couldn't get in a lot of deals over the last 2 or 3 years because we refused to pay ridiculous amounts. You know, we would do our research for a year and a half, and somebody comes in from the West Coast, swipes the deal off the table by just simply overpricing. We never went into that. So I think there's a few considerations to make. So if the market marks down Adyen, I would say most analysts know the price of everything and the value of just a very few things. So I'm always slightly cynical there. If you look at Adyen, the underlying performance is still an EBITDA that is higher than 20%. So, you know, I would love to meet every businessman who says that that is not a good result. These people have a very long pedigree in payments. They know what they're doing. They're just not doing what the analysts expect them to do. So they say, everybody's firing. Why are you hiring? Well, maybe we remember that most of the companies that were quite anti-cyclical are the most successful ones. You know, they're not lemmings. They don't do that. So they obviously have a plan. And they realize that the business in payments will see much more consolidation. They know the value is not in investing by a race to the bottom on pricing. In customers who are not going to be loyal anyway. They are investing in their massive, large corporate customers who are loyal by basically doing more with data and giving those people insights in cash flows and all other things. So I think we should just sit tight and let them do their job and be a little less greedy as investors.
Thank you, Conny. And from here, I'd like to zoom out a little bit, because we hear a lot of talking about the market and the valuation and everything around that. But actually, at the end, is the product that matters a lot. So, and the consumer that needs to use the product. So I want to make this, this sort of link by focusing very much on the consumer side. And before asking my other two panelists the question, I really want to tell you a short story that's going to explain that my question. So 2 months ago, I was in Zurich for a fintech conference, actually, and a friend of mine lost his AirPods, and he cannot live without his AirPods, so he really wants to buy a new pair on the spot. He's from Singapore, by the way. So he tried to buy a new pair of AirPods from a Swiss website using his credit card, his Singaporean credit cards. It didn't work. Second try, another credit card, didn't work. Then he scrolled down the page and he found finally an option, which was crypto, and the payment went in a second. So I don't want really to say that crypto is perfect and the traditional finance is terrible or credit cards doesn't work. But to be honest, as a consumer, many times you see that there is this sort of imperfect flow in the way we make transactions. So I usually say this imperfect ownership of my own money, which is very weird. So maybe Andreas and Ezichim, do you want to comment on this by saying where crypto is entering in the payment areas right now, but also maybe can you help me with this fully ownership of money? Is crypto fulfill that?
Yeah, so I think that prior to becoming a crypto user or a wallet user, I think education is key for everyone who wants to be involved in the crypto ecosystem. So you mentioned full ownership. Now, to be precise, if you have your funds in Binance, for example, you are still trusting a third party, which obviously has security history behind it, to manage your funds and manage your keys. But we have the so-called option of DeFi wallet, where actually you have full ownership of your funds. How that happens, all these projects mostly they are called are open source, so anyone can verify that indeed you have full ownership of your funds. But still, to use a DeFi wallet, you have to be a bit, let's say, more sophisticated rather than just creating an account in Binance and execute orders or order a card and so on. So if you are to have full ownership of your funds, you have to be educated. You have to understand what the seed phrase is, which is, for those who know, a backup phrase when you download a wallet, and you can retrieve the content, the funds basically, even if you lose the device. Approximately 4 or 5% of the Bitcoin supply is lost now due to mismanagement of funds. So this has mainly happened from people losing their passwords in either centralized exchanges like Binance or even DeFi wallets. And especially if you lose both the backup phrase and the device in, let's say, a hardware wallet or another kind of DeFi wallet, then you lose your funds forever. It's not like a crypto exchange where you can ask the customer support to retrieve your password. So I think education is key. I think that it's wise for everyone who wants to be involved in the crypto ecosystem to go through the Bitcoin white paper once, understand how it facilitates fast and almost instant transactions, understand the scalability issues, understand the reversibility of transactions as well, which is also very important. Yes, I think that we have to first invest in education and then actually start to become day-to-day users, according to my opinion at least.
Thank you, Andreas. So Ezichim, you are very much focused on the African continent, right? And there, crypto makes even much more sense because if we consider that, I've actually heard quite an interesting conference when I was in Kigali, and I was very tricked by Ezichim, which I know it's a friend of yours, that was saying that actually crypto is the back door for freedom to transact, especially in some specific geographies, really to be able to reach a sort of equal and kind of inclusive way of pay. Doesn't matter where you were born, and especially it doesn't matter how much your currency fluctuates in the market. So could you tell us a little bit more your point of view on this and your focus on the African continent?
So, you know, crypto is, the main fundamental of crypto is it's censorship-resistant money, right? So what that means is no one can tell you how to use your money, and no one can take it away from you. For example, the United States cannot come and take your money from you, right? And that's a very powerful use case in Africa. For example, today, I have to make payments. If I want to pay for my Netflix, if I want to pay for my Apple Music, I have to try to use my cards. Really, my cards don't work. My MasterCard doesn't work. My Visa doesn't work from Nigeria. The only way I can do this is buy a gift card with my USDT. And no matter how you look at it, the US dollar is very important for transactions in the world, right? And the easiest way to tap into the US dollar is with the USDT, which is essentially, the tokenized USD. Now, I have access to the global market from Africa just because I can buy USDT. I can buy USDT sitting here in 2 minutes. That's extremely powerful. Anywhere I go in the world, I can do anything I want. Yep, so that gives Africans a lot of power. Again, it includes them in the global marketplace. It allows them compete. It allows them transact. And it essentially also boosts the African economy. So, it's extremely powerful. And also, we're seeing, a lot of improvement from the regulation point of view. Because at the moment, regulation is still a bit wonky. But we're advancing. There's a lot of frameworks that have been built, have been discussed, to make it proper. So I think as the conversations continue, as digitization continues, we'll see very good work in that regard.
Thank you, Ezichim. So let's keep talking also about the consumers, and I really want to focus a bit more on the digital adoption. That was something also the minister was addressing before, and the financial education around the digital adoption. So we were actually discussing this morning at breakfast. I come from a country, which is Italy, that it's kind of still very much dependent on cash. And I was saying this morning that it's true, it is. And I was saying this morning that I'm still quite fighting with a lot of taxi drivers to be able to pay by card, okay? And of course, Milan is sort of paradise island, but Italy is not all the same. On the other side, I was living 1/3 of my life in the Netherlands, which is basically the cashless society. And I want to, Conny, starting from you, discuss this because I want to understand which, on your point of view, are the sort of strategies we should put in place to be able to, somehow increase the digital adoption and so also the adoption of digital payments, because we had quite a ramp up during the pandemic period, but what are the key factors around this?
Yeah, I think it's a great question, but also we mustn't forget that when it comes to consumers, it's about behavior, and cultures differ massively around the world. A Japanese person will be very loath to enter any credit card details, data, or whatever on a website. And in other parts of the world, people will easily do that. I think when it comes to digital adoption, first you must say to yourself, why do we want this? Why is it so important? I think, for me, I think it's important to have more digital payments because it's cleaner and safer, but also because it increases tax efficiency. A lot of the countries who resist digital payments is because people don't want to pay tax. And I happen to be a person that believes that if you pay more tax, you get a better life for everybody. But anyway, I think digital payments adoption, why is it so high in the Netherlands, is because we approach everything from an efficiency angle. And that is a totally different angle. We look at what is best and what is most efficient for the end user. In America, everything is driven by the market. So if there's money to be made, they will use it. Why digital payments hamper in the US is quite literally also because check payment processing is hugely profitable. And whenever the law comes up in Congress to vote against check processing, the lobbyists come into force. And it's allowed to continue to happen again. So it literally depends. In China, digital payments work really well because the government made a concerted effort and allowed closed-circuit payment systems. And they gave the best example because they pay out in digital payments. So I think if you really want to increase digital adoption, first of all, the state, which is one of the biggest payers in the world, the state should start by giving the right example, as we see also in many countries in Africa. Make your pension payments, you do contributions, do everything that way. I think secondly, involve the banks and the card companies because they still process 80% of all payments. If you think you can just bypass them with just pure fintech for adoption, that's not a good idea. And thirdly, heavily engage with all levels of society and really include, and we do that very vehemently in the Netherlands, really also include people who are older, less able, have disabilities. And I think we often forgo that, and when we see these massive, beautiful stories of the future, people all think about healthy, gleaming 20-year-olds who were born with a phone in their hand or a chip in their shoulder. You know, we have a lot of other parts in society who need to be included.
Thank you, Conny. And this is very much related also with cryptocurrency. Many times I hear one of the cons that people are saying about cryptocurrency is that it cannot be considered still a real way of payments because there are not so many people that are using that. So till we reach the right traction, we cannot really define it as a way of payment. So where then the financial inclusion comes to place when we talk about cryptocurrency and its adoption? Andreas.
Yeah, so I think we have to differentiate first between digital payments and crypto payments. Digital payments have been around for a while, and if I'm not mistaken, even in Cyprus, it's mandatory, for example, in all stores or in all vendors to have a point-of-sale terminal, so you can facilitate digital transactions. So I think Cyprus is becoming quite cashless from some communities, at least. So I want to touch upon regulation first. When you have a proactive regulator, like El Salvador, for example, where Bitcoin became legal tender, so in the same way that we have to have point-of-sale terminals in Cyprus, every store in El Salvador has to accept Bitcoin by law as a means of payment. So I start first with regulation, and that also helps financial inclusion as well. I'm sure the other panelists know better how Africa was facing problems and how M-Pesa came into fruition to solve those problems and the financial inclusion problems and the unbanked problems in the world. But I think crypto payments is quite different. It's quite new. It gives full ownership, as we discussed before, to the end user. So you basically minimize the risks you minimize the risk, but you also minimize the time and the speed where a transaction needs to take place. So taking that into account, I will say that if there is enough education and awareness around crypto solutions, and if crypto services invest in the education of their users, and then in their products, and then in the compliance, then they will be able to serve mass amount of people that want to actually have full ownership in their accounts, in their funds. And but at the same time, we must remember we have to be compliant with the regulators, and that's what we are trying to do as a company as well. So I think that financial inclusion depends from a lot of factors. If we are going to achieve this through crypto, we don't know yet, but we have to invest in things like user friendliness for the end user, because let's not forget that not everyone is tech savvy. There are also some older people that have learned all their lives to perform transactions in cash. So we have to take into account all these people and provide the best possible solution from a legal standpoint, but also from an end user standpoint to achieve adoption.
Thank you, Andreas. And Ezichim, talking about Africa, so connecting with what Andreas was saying, Africa, correct me if I'm wrong, has, of course, a very young population, so I assume the digital divide is also quite shorter than what we have in Europe. So do you think that considering this crypto usage is sort of connected with age. So it's an age-related matter, and so probably we have to wait another generation to see a spread usage of crypto also in Africa.
So it's true that Africa has the youngest population in the world. I think more than 50% of Africans are between the age of 18 to 35. Now, what that means is young people are more risk averse, right? Normally, young people are more risk averse. It means they adopt technology faster. For example, my younger brother knows TikTok, and I don't know anything about TikTok, right? So also, we don't have a lot of money, right? So it's easy for you to play around with the little money you have as a young person. But when you're older, you have more roots. There's higher risk for you when you lose your money. And money is a very sensitive thing. So older people are more risk averse. Now in Africa, it's almost like young people test out these technologies first and these systems first, and then old people come along, right? So for example, you mentioned M-Pesa, mobile money in Africa. Mobile money is huge in Africa. You won't understand the scale of mobile money till you come to Africa. Every single transaction is done from the mobile phone. From the villages in the rural areas to the cities, money is sent instantly from your phone. It's almost like magic. And the reason for that really is because I think Africa is well positioned and hungry for utility. We want to use stuff. We want stuff to work for us, right? So when we find technology that works, we take it up instantly. And then, that also brings me to the conversation about digitization. And I always think about screen time. If you think about how long you spend on your phones every day, we spend, well, I can't reveal how many hours I spend on my phone because it's unholy, but I spend a lot of time on my phone, and I imagine a lot of us do as well. So what that means is cards, cash, a lot of the traditional payment methods are going to become obsolete in the next few years. Payments are going to become highly digitized, and I think we're going to move with that pace. Now, we have mobile money, we have cards, but if you think about it, it took a lot of time for us to get here. I also think it's going to take some time, not 20 years, but some time for Bitcoin, for crypto payments to become the standard. But we're working on it. We're getting there. And, I think we're going to get there very soon. So yes, I think it's pretty much in the works.
Thank you, Ezichim. So we are talking about crypto, of course, but as we said before, there are tons of alternative ways of payments that are now rising, and a lot of companies looking into that. And recently, with Breaking Banks, we were running a set of interviews called the Breaking Payments, and we interviewed quite a lot of the usual suspect of the payment unicorns that are actually competing now on payment orchestration and also alternative routes. So I'm quite curious to hear your opinion on the differentiator factors among them, because we see all of them competing on the same field. Price cannot be the only differentiator factor, I believe. So you are quite expert on this, so help us mapping a bit what's going on.
Well, I think what we'll see is we were all focused on PSPs and all of these things in terms of the pure transaction layer. First of all, we will see a lot more consolidation. There are many, many, many PSPs, and we will see many more PSPs being born who will do, a particular rail in a particular country. What you'll see is that we're only unfortunately adding payment types, but also very relevant ones. And so the larger PSPs will be able to keep up with that innovation and build all these into their infrastructure. People very easily talk, for instance, about a request to pay, which is a brilliant payment mechanism. It's a debit payment mechanism. Drivers for Uber and Lyft now send a request to pay to to Uber and Lyft, and they get paid instantly within a second in their debit account. They bypass 2% credit card fees. But all of those sound very simple, but they're quite difficult and complex products to build into large PSPs. So I think larger PSPs like the likes of Stripe and Adyen, they will embrace BNPL, which I hate, but also request to pay. Those sort of things will take an absolute flight. On the other hand, I think that we will see that banks and credit card companies are going to really make a resurrection in a sort of richer world, because they're picking up the sense of what is happening quite quickly. And for instance, we talked about it this morning. 8 years ago, you suddenly saw the credit card companies going to the SWIFT conference, to Sibos. Well, then you know that's where the money is going, and that surely is happening. Beautiful examples here, for instance, are also, and I think you'll see more of that, is very niche propositions. A good example is, for instance, the Red Card by Target in the US. Target is a retail store, 100 billion revenues. They are offering a card now to their customers, 5% of any purchase you make in Target. So just imagine, talk about stickiness. It's better than a MasterCard with points that you never use. And they have saved, they saw that 20% of their customers are using that card. They can save up to 2 billion a year by not paying out to their credit card companies, by just, you know, enticing their customers into using that payment mechanism. We will see a lot more of those sort of developments. And, you know, there's too much happening. I think, you know, what we see in China and Asia, with WeChat and Alipay, we see that they are extending their rail. They used to be internal in their own region. Now, if Chinese consumers come to the Netherlands, we don't earn a penny on them apart from the goods that they buy, because they're not even being settled through the Dutch mechanism. You know, they go straight back to Alipay. You can pay Alipay in the Netherlands, and we don't even see the payment. So we see those developments as well. It literally is, I think, too much to mention. But I do feel that the payment will become more obsolete. That it will all be about the data and about the services that you can build around that. But we'll talk a bit more about the future later. I really want to give a little bit of support to the right here, because people are always very nervous about crypto. And we keep talking about how hard it is to use, and it's true. And I've got Binance accounts and all of that stuff, and I buy crypto. But don't forget, again, in the business side is where the value is. If you do cross-border payments as a smaller company, these are excessively expensive in the regular world. If you do this across the new lines with crypto, you know, it's massively cheaper and faster. So please, if you think payments, think beyond the retail side. Customers are fickle. They don't want to pay anything for nothing. They're not loyal. They switch. If you want to be successful in the world of payments, look at the business side.
So you wanna add on what Conny just brought you in, Andreas?
Yeah. So my question to all is, how can traditional money compete with crypto when with crypto you can send money instantly, 24/7, without borders and without limits? The only thing that we are lacking in the crypto ecosystem is, I think, awareness. So, for example, I will mention an example in Binance. In Binance, we have a network which is called Binance Pay, where all users, all 150 million users of Binance, they can instantly send without fees funds to any other Binance user in the world. And that's done, again, without fees and instantly. How can traditional money compete with that? They can't compete with that. That's why they are trying now to place into the framework the concept of central bank digital currencies. But central bank digital currencies will still be controlled by the central bank. The rules will still be defined and be modified, basically, by the central banks whenever they wish to. So central bank digital currencies, I would say that they do not solve the problem of giving full ownership of funds into the hands of the users. But they may be seen as a vehicle, let's say, as a tool for interbank transactions to become more efficient and faster. But for the end user, I still think that crypto is the future, because central bank digital currencies will still give absolutely no full ownership to the end user. So taking that into account, just for the audience reference, central bank digital currencies are mostly divided into two categories. So the first one is wholesale CBDCs, which is going to be used as just like the reserves of central banks and for interbank settlements. And the other use is going to be the retail CBDCs, which is ideally going to become the funds that we use in our every day-to-day transactions. So it remains to be seen, but my personal opinion is that still we are, the crypto ecosystem and the protocols that are emerging are far ahead and have the competitive advantage over traditional money.
Yeah, you know, it's interesting what you're saying, because I'm always quite puzzled by how central bankers are always praising that one day blockchain will make the difference, especially for cross-border payments.
They didn't want to hear anything about it 5 years ago. So
no,
right
exactly.
now, all of a sudden, they are starting to embrace the technology. But okay, that's, you know, to send an interbank transaction, there are a lot of intermediaries that needs to be paid, need to get a cut of the fee. So I think that CBDCs, they are trying to place this as an alternative to crypto, but I explained the reasons why I think it's not going to work.
Maybe for later, because I see Antonia saying we are running out of time. So for sure you can ask all the questions that you want to our panelists at the networking moments. And thank you so much for listening.